The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, Sam is here from myforexmagicweb.com. Making this a small video about showing the importance of indexes, individual currency index. All the currency pairs that we trade, they are pairs, involve two currencies, right? Like Euro USD, Euro on the left hand side, USD on the right hand side. All the pairs are like that. And if the Euro is getting strong and USD is stationary and not getting strong or not weakening, or, it's just standing there, but Euro is getting strong. So what happened is that the pair will go up. On the left hand side currency, if it gets strong, the pair goes up. If it gets weaker, the pair goes down. Similarly, the opposite is true. If the right hand side currency gets strong, the pair goes down. If it gets weaker, the pair goes up, right? So it is always better to know which currency is doing what, which one is going up, which one is coming down, and then you can find appropriate pair to trade, especially when that trade is also agreeing with the direction according to the indexes. Let's say Euro Yen. Okay, so you find Euro is getting weaker, and then you think that Euro Yen is going to get strong because it's in the downtrend and just finished the retracement and posting a bearish candle at the trend line, so it's going to drop and it will get stronger. And Euro is getting weaker. And then you go on the Euro Yen and find out that, yeah, it is inside, in a downtrend or even in an uptrend, but have hit the resistance or some kind of TL or SNR level, and it's supposed to come down and only, posting a bearish candle. So since your Euro index and Yen index are pointing that Euro Yen should be going down, and the Euro Yen also pointing in that same direction, then it's like a double confirmation, and you can go in very, very confidently, and of course with a big position, right? So that's the idea. And over the years, I found out, in the forums and here, there, but people mostly if they only look for USD index, nothing else. All the currencies and their indexes individually are same importance to me, at least. Okay, I keep my eyes open on all of them so that I know which one is going to be doing what, or supposed to do what, hitting the resistance or support. What is the major direction? Is it retracement is in place, or a move is going to continue in the old direction, and then similarly. So now let me show you a few. This is one of those indexes. In this video, I'm not going to tell you which one is what. This is like a little homework practice, and you can see the importance of it. And then, well, I'm not going to get into that, but just see the setups. Try to see the setup and see what you can do with it. So this is one of the all of the charts that I'm going to show today in this video are indexes. Okay, so this is after a big up move. You have something like called a girdle pattern. Let me show you if I have it. I opened it. I know that that's not girdle, man. Okay, this is what happens. All right, this is Elliott wave. After finishing 5 waves, impulse wave consists 5 waves, right? So 1, 2, 3, 4, 5. Then it goes for correction, A, B, C. This is how it does. Normal structure, A, B, C is A is like 5, and then 3, and then 5. Okay, so this should be like 1, 2, then 3, and 4, and 5 for the C. But this A and then B has A, B, C correction also, zigzag. So this is how it looks like, bearish girdle. It after a big move, impulse move consists of 5 waves. It usually comes down in ABC correction, and A and B makes a bearish girdle, and then it drops for the C. So if you look at this, What do you think? Is it something similar? Same calculation, 61.8, first pullback at B, and then 78.6% touch, and then posting this bearish candle, shooting a star at 78.6%. So by the book, it is a perfect same scenario. This is the wave, end here, and then this, and this, wave 5 ends. Then you have a small. Forget about what happened here. If you take this whole thing here, you have this, girdle posted at the end of big up move. And according to this, if this currency, let's say it goes down, then it will be getting weaker. So what I'm going to do is I'm going to find out, try to find a weaker currency, I guess. I mean, a stronger currency, I guess. And that'll do it, right? So let's go next. How about this one? If you have full, the fib here, and then you can see nicely correction A, B, and then 1, 2, 3, 4, 5 goes into 78.6 level. This is also a horizontal support, previous, big previous, way previous. And now we have a beautiful, we can call it pin bar or shooting star, big one with almost no wick, no body whatsoever. It's all wick. Went up and then slap from the top. And we close posting this big thing here. So this currency shows that it will be probably want to go down, right? Okay. So now you see how easy it is. If the first currency we saw that is going down, this one is going down, both getting weaker. Some of those currencies are the opposite. If their index going down means they're getting strong. It's only one currency like that, by the way. Okay, I'll leave it for you to find out. How about this setup? This is also a currency in a nice uptrend. You got a horizontal support, channel, and then we measure Fibonacci, 61.8%. No turning sign yet. Then, we're going to find out on a smaller time frame if you can find a turning point here. If it starts turning, smaller time frames, 5 minute, 15 minute. And then, but the indicators are perfectly in line and everything is fine and dandy to go up. Now this currency going up means getting strong or getting weaker. Then I'll leave it up to you to find out. And, if you know all of this, that's the key, knowing everything, right? So if you know that, if that, okay, this thing is going up and this is going to get stronger. All right. So I will find a weaker currency against it. Let's see what the pair is doing. And the pair is going in the same direction. Give you the same picture in the same direction. Hit it. All right. How about this? Came down, hit the third touch of the TL, drop again, and you got a huge horizontal support coming in. You have this thing all the way down, ready to go up, and you have a nice divergence on this sand divergence indicator. So pretty good chance that this support hold. It's not yet holding. It is not even touched yet. So this pair is coming down. I mean, the currency is coming down, and once into the zone, then I'll be watching. But now at least I know that this currency is keep getting weaker and or stronger, and this band could be the turning point. And smaller time frames are to watch, right? Almost how many currency indexes? I mean, how many currencies are there? 7, 8, right? And the major currencies. I'm not talking about some third world currencies, but the major currencies. And so far I showed you that every single currency is showing a clear direction. It's the setup is there. It's no hanky-panky, no nothing. Look at this one. It's like a nice horizontal area. You can call it a line in the sand. In the sand, and see, it's like a fishing hook kind of thing. My favorite, And we have to see that if this area hold or if this thing drop to the TL, then bounce. Okay, so if it is bouncing, going up, then I will see the which currency is it, and if it is going up means getting stronger or weaker, and I'll take the pair accordingly to trade. Very easy. All of these have nice setup. This is Elliott wave 1, 2, 3, all the way down here for FE 200. Okay, usually 3 goes as far as 1.618, but this came down all the way to 200. I told you we're having this meeting up there, and anything can happen. Tax can go out of the window. But amazingly, I mean, these indexes are very nicely set up, all of them, by the way. And I really like it, and I'm really looking forward some heavy amount of pippage next week. This is the diagram. This is a 1, 2. If this is 3, and if this area holds, this is how we're going to go up for the wave 4 if we start going up on this currency. So let's see what happened. If I have any more. Okay, this one, it's let me show you what this picture is. This picture is, you need to understand first. That picture is this, right? Similar? See? Okay, this is called bearish butterfly. Why they call it bearish butterfly? Because it gives you a bearish trend after the finish line, after the finishing point at D. But that's not the way I trade it. I always teach in my webinars, and everybody knows the conventional way to trade these harmonic patterns from the top at the finishing point from D, right? That's why they call it bearish butterfly, because you get a bearish move from there. But you might get it or might not. That's out of the question for now, because if we can find this point C, the measures, if you can locate X, A, B, and C, then you know that you're going up for D if you're going up. Okay, and it's very simple now. If you are at point C, then what do you expect? Going up. So if you're going up, then you look for long setup. You have to have a setup, by the way. In Forex, don't try to, well, I'm not going to say don't. I mean, everybody has the right to do it, but it is not wise to trade without a system, which takes out of the emotion. Okay, it's like a mechanical system that, okay, this moving average crosses this, and if this indicator is positioned this way, and this one is this way, then I'll go long from 5-minute chart or 15-minute or 30-minute, whatever your system calls it for. So you have to have a system which is, need to be a mechanical completely, so that if this, then I'll open the trade. If that, then I'll go short, long, short. Simple as that. So if you expect, let's say if you find this point C and then you're expecting an up move towards D, obviously you're looking for a long setup. And if you get one, what do you think? What do you should do? It's like a confirmation, right? So look at this. From this exactly to the pips, 78.6%, right? And then if you pull the fib from bottom to top at this point, here it comes exactly 61.8%, posting a bullish candle with a big wick down. These are the point, 78.6%. This is almost 68. It could be anywhere between 38 to 88%, but most likely and most desirably 61.8%, which is, in that case, you have it. This is not a currency, by the way. This is one of those pair. Okay, and if this thing goes up, it's a long way to go, because I tell you what, this is a weekly chart. Okay, why I pay attention to these? Because it gives you a general direction. If these are intact and if we break this TL, we start going up. Imagine how many weeks, how many months we have to, before we get there. This is a high here. But it gives you a general direction that, okay, if that is going on now, I'm not going to bother going short on this pair. Dangerous. If this is start moving up, I'll only take the long setups after the retracement, just like this, wobbling. It goes up, comes down, then it start going up, I'll get it. Goes up, comes down, It'll start getting up, I'll get in. Hit this area, get out. Wait for the down move, then start getting in. Long, 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 long. If this area hold, maybe, you know, I think today is Saturday, right? Okay, I'm making the video, but the meeting is still on. So anything can come out of it, and this can drop, boom, like this, you know. But so far, this is what it is. That's what I'm teaching, that, you know, if you can find these setups according to, like you have, I have made, you know, I see all of these diagrams, harmonic patterns and Elliott waves, they are the same thing basically, but people understand it differently, so they make like a two different study. They're not. If you go Elliott wave, this is harmonic bad pattern, but this is this wave 1 and then wave 2, A, B, C. A, B, C has five impulse wave, 1, 2, 3, 4, 5. That's why it's long. This is Elliott wave, basically 1, 2, wave 1 and wave 2, which somebody says this is a bad pattern. Okay, you know, you take it like that. But I found very lucrative trading the other way. This one, you got 3 trades in it. If you start trading from point C, you know, trade number 1, sell at point C. You know, when you find a point C and then move starts coming in, start selling it. Break of B, start more selling it, because now you are like a confirmation that we are definitely going for the D. Okay, this is how it is. So all of these harmonic, this is, you know, if this first pullback at B is 78.6%, then you have a C. This is a bullish butterfly. I just showed you the bearish one and that setup there. This one is a bearish butterfly. So you have this and you have the 78.6%. This is 61%, exactly to the pip. Now, hopefully, we will be going to the upside. So this is it for now, just showing that how important it is. And I did not give you the names and the time frames of these indexes, just to leave you know that, you know, if you really want to learn, then you will find out. And if you find out on your own, you will become expert. Okay, but if you don't care about these, then forget about this and forget about my video too. Okay, so just trying to help. And if you like it, and, you know, if you want to learn all this mumbo jumbo, go on my website. You got the link in the bottom. Want to subscribe, because if you subscribe, you can get a lot of things like maybe look at this. All of these my previous webinars here. You see the copy. You know, it's long. I constantly erasing, and, you know, as I add new one, then I erase some of the old one. But, you know, SNR levels, trend lines, and, you know, how to do this, how to do that. It's a, you know, bad pattern explained, and all these videos. And I got, you know, too many of them, more than 200 recordings so far, right? 214. So you get to see all of those, that how I teach, what I teach, and it's too many things to learn from these recordings. Okay, so this is what you get, and also you get my, you know, magic wave strategy, how to make precise entries. All these indicators that I use in the bottom here, they are still secret. I'm going to be posting them for download pretty soon on my website. There's a lot of people asking, and it's becoming, you know, like time consuming. I would not say it's a headache. I love to, you know, help out or whatever, but it's time consuming that, you know, each and every, you know, it's a lot of emails coming in, and then I have to go and attach it, send it. So I'm going to just put it on the website so that people could just simply download from there. And I'm going to make a video how to use this indicator and how to read it between the daily and a 4-hour chart. It works very, very good. If you look both charts and you know, the setting of this indicator on both sides, the positions give you a very nice, clean chart. So this is it for now. And tomorrow I'll be doing a live webinar. And then later on, I'll post that. I already prepared the charts and everything for the webinar because I like to show and teach people. You know, that I can just send this chart to my subscribers, but what I do is I go in more detail, and then study-wise that this is I draw how I draw it, and what is this, and what pair is this, what time frame is this, or what to look for, what small time frame they have to look for, and how they can use magic wave strategy to make an entry when market reopens. So all of that. That's why I do live webinar. And in the meantime, I mean, in between the webinar, I usually talk about some of those studies, how to do it, how to find SNR levels and Fibonacci, and then people get to ask me questions, whatever they have problem with. And I always, have a question answer session time in between, and then I answer all the questions. It's a good learning process. So anyway, the link of my website will be in the bottom, and you can just, if you like, you can come and join us. If you're doing fine, then keep doing whatever you're doing. Okay. All right. Thanks for watching. Have a great day.